we saw the most massive inflation, money creation, population growth, etc. And now, as we discussed before lunch, it's now gone to spike right up, and you never know when a spike will finish. It can continue, grow exponentially for a while, but it will finish and it will come down with a bang. That is absolutely certain in my view. So and of course, what we've seen, what the Fed did, was to create, first in 1913, it started with inflation. So a house in the US from late 1600 to early 1900 cost the same virtually. And then it started going straight up. And of course, initially it was slower, and then 1971, when Nixon, he shouldn't have been impeached for what he did with Watergate. He should have been impeached for what he did with gold and the dollar, Nixon. Because that really was the end to any sensible financial system. And from then on, you see everything going absolutely straight up, whether it's credit creation, money printing, or whether it's inflation. So what I'm trying to tell you is we don't live in normal times. This has been an unusual and exceptional century, and we just now 102 years since the Fed started. We don't know when it's going to end, but it will end, it will end, and it will not end in any gentle way. It will end with, it will take time, but it will end with catastrophic financial and economic consequences for the world, and maybe social too. Now, I want to say that, and maybe you've gathered already, because I speak to different venues, and I speak to gold bugs, or people who understand, or at least what I'm talking about, and that speaking to the converted makes it a lot easier. But I speak a lot to normal audiences, and that's 99.9% of the world. And even I speak to family offices, wealthy people, etc. Nobody understands it. Nobody owns gold, for example, because they are making so much money on normal investments today. And therefore, they're not worried about the world. But I want to point out that I'm not the prophet of doom and gloom. I'm optimistic about life. Sorry, Michael, I'm talking with my back to you, but I'll turn every now and then. No, it's all right. Talking about risks. The world has never been in a position throughout history, or the history that I'm aware of, that we are now. You have unprecedented risks worldwide. If we just make a very brief tour of the world, just to outline them. I know most of you know this already, so please stop me if it's too boring. But I just want to point out that we've had problems in one area of the world before. And of course, I think we're at the same cycle degree, but maybe Ray can tell me differently or elaborate on that, or Michael. I think we are at the same degree peak as we were at the end of the Roman Empire. But as you know, the Roman Empire, the peak was probably around 2000. Or maybe you can correct me on that, but I think around the birth of Jesus. And then it gradually declined, and it took 500 years, of course, for the top decline of Dark Ages. But if you just look at the currency, for example, the currency started really collapsing around end of the hundreds, 180, 90. The denarius had more or less, denarius was the silver coin, had about 100% silver content, and that went down to 0%. So we've seen, and that's exactly what we're seeing now with currencies. Currencies are all in a race to the bottom from 1913. They have all fallen between 97 and 98, 99% against gold. So you only have 2 to 3% left. As Voltaire said in 1729, all paper currencies return to their intrinsic value, 0. And we will see that too. That's absolutely guaranteed. The last 2-3% will happen, but the last 2-3% for us from today, that's 100%, of course. It's not 2-3%. So I think we are at the same cycle degree top now as the Roman Empire, and I think the fall will be also dramatic for the world. Now, as you just saw them, and it took several hundred years for the Roman Empire from it started to it ended. And the world didn't really return properly until the Renaissance, but that doesn't matter. The risks are here. We don't know how long it will take. It might not take 500 years. It might all finish when I'm 100 years old in 1945. It was 2045, 6. But what we have to focus on now are the risks, since we can't time it exactly. And also, during periods of downturn of this kind, of course, you see the first fall, but then, you know, you get used to the situation and at a lower level, and you live a normal life just at a lower level. You don't have 3 iPhones and 4 cars and lots of televisions, and you don't have football players in Europe earning $300,000, $500,000 a week, like some of the top football players have, for example. You don't have bankers being paid tens of millions, etc. So that will change. So the risks are unprecedented. So let's just look at countries. Okay, Japan, in my view, Japan will disappear from the map, but not the country, but the economy. Japan is bankrupt. They've got massive debt. They've got demographics which are horrible. You've probably heard the statistic before that there are a lot more nappies or diapers sold to old people in Japan than for babies. So they continue to print money. Abenomics, it's just printing and printing. It's not working, of course. Interest rates are at 0. It's been for a long time. Japan had, of course, problems already since the 90s. But so you could say, well, they survived. Yes, but they survived because the rest of the world was still okay and continued to buy their wares. But that is going to stop now. So that's the first. And the yen, I think, it will be one of the many weak currencies. And Japanese bonds, I don't know which one is mine. Japanese bonds, it won't even be worthwhile putting them in your loo or in your toilet because they're not likely. Because there'll be too many of them. So, going on, it has to be very superficial, this, so we can ask questions later because we haven't got time to get into the details. But Japan basically has a debt, national debt to GDP of over 250%. And they're running obviously big deficits. Now, China, which was obviously the star, has had an expansion which is very much dependent on debt also. And their debt in this century has gone from about $9 trillion to $29 trillion. So it's been a massive expansion of money supply. And there's a lot of bad debt in that, and a lot of ghost towns around, or ghost cities in China. And they will also have to go through an adjustment. And of course, when world trade declines, which has already started to do, commodities have come down because China are now buying a lot less than they used to do, and they used to stockpile, but they don't anymore. And this has an effect on world trade, and that will accelerate. Sometimes economic figures in China you shouldn't trust anyway, because they are. It's very hard to measure an economy with 1.2 billion people, and they are probably exaggerated their figures. But if you measure things like electricity use, transport, etc., that's why you can see that the Chinese economy is turning down. And then, of course, you can look at the Baltic Dry Index. Baltic Dry Index is a shipping index used for measuring trade of dry goods, and that's just on an all-time low. It's collapsed, obviously. World trade has declined dramatically. So China will suffer. They will probably solve it better than any other country, but they can solve it domestically. But it will mean that the rest of the world will suffer because they are not going to buy as much as they have done. And of course, the world has been totally dependent on China buying. And you take most European countries, you take Germany, for example, their machine industry is very much dependent on exports to Japan, Sweden also to some extent. So, and then we come across to our little haven here, the EU, the Eurozone, where most countries, including this beautiful country here, and Italy, and Greece, and Portugal, etc., have been destroyed by the EU and the Euro. You know, the amount of lending to these countries and borrowing from their point of view above their means totally destroy the country. You know, there was a time when you could have a cheap meal in Spain or in France or in Italy, but that doesn't exist anymore. Okay, so here you take, like yesterday, it is less expensive than Switzerland, that's for certain. But so is the standard of living is also lower. So I was always against the Euro as a political union, or the EU as a political union. I've definitely been against the Euro because any artificial currency has never survived through history. No currency has survived, but the artificial ones even less so. So you can't have a country with the economic progress and efficiency of Germany combine that to a Greece. It's impossible. So what happens is Germany has obviously benefited enormously from a weak euro, while it's crushed Greece totally. So the EU and the Eurozone will not survive in its present form. I mean, whether they, for face-saving purposes, save Greece now, which they will try to do, because the Eurocrats, and of course what that's called the Troika, which is the EU, the ECB, and the IMF, for them it's very important that it survives. But for Greece, it's totally wrong. If I were Greece, I know that I'm bankrupt, I can never repay my debts, I'm never going to recover with those debts. Whatever short-term loans they give me, more loans, and then, you know, the loans actually don't go to the countries. This is the dilemma. All the money printing in the world that we have seen since 2008, it just goes to the banks, to save the banks that have been lending to these countries. So most of the QE or money printing from, for example, the ECB now, it doesn't. Most of it goes to German banks. It doesn't go to Greece. So it doesn't help the country at all. So if I were Greece, I would just default, not repay any of my debts, make a little pact with Russia or China or whatever, and then you borrow some money short term to get going again, get the drachma going, and of course the currency will devalue. It has to. They have to start afresh. And their standard of living will of course decrease because they haven't got the few hundred billion now loans from the EU that they've been living on. So, but that is a way for them to come back and rebuild the country again. It might not happen straight away because, as I said, all these bureaucrats will do everything they can to stop it. They say that there'll be no domino effect. They say there'll be no contagion, but there will, of course, be, because if Greece gets benefits out of this, Italy wants to do the same. Spain wants to do the same. And if the government doesn't want to do it, because government now in many countries, you know, they're the same powers that be, that will Goldman Sachs, etc. They appoint some of these leaders, but the people will ask. And no, today Europe is used to always having, for the European people, to having good time and having the government taking care of you, because that's how the system has actually been created. And therefore, no one will accept austerity, and any government that initiates austerity will be thrown out. So, sadly, I've said Europe will have major problems, and the additional problem that we have on top of the economy, and France, for example, is in an absolute mess also. France will be the next problem area in my view. The additional problem we have now in Europe is the migration taking place. So we've already seen massive migration into Europe. William Rees-Mogg, who is the editor of the Times and Sunday Times, and who wrote the book called, he's a very well-known historian, Lord Rees-Mogg, he wrote a book called The Great Reckoning in the early 90s, and he forecast already at that time we would have this migration from North Africa. And it started gradually, as we all know. I mean, if you take Sweden, has accepted more than any other country in the world, and it's destroying the fabric of the country, very sadly. But it's, you see the same in Germany, the same in Holland, the same in France, for example, big problem also. US did, with the help of the UK and France, I mean, the US told, because they didn't want to front it, but they asked Cameron and Sarkozy, you can front this, you can be the real war makers now, you're the heroes, to attack Libya. And they destroyed Libya totally. Of course, Gaddafi wasn't the nicest person in the world, but sadly these people, you can't have a democracy in these countries. You need a strong leader, and he was a strong leader, and he did a lot for the people, and he came and said, okay, some people suffered, they always will. But all of that was destroyed, and now you have total anarchy in Libya. You have the country split into two, but even the government, I don't know if they're still meeting on a ship, the government, because there's no safe place anywhere. So it's very sad, and the consequence of that is, one, it became the breeding ground for ISIS, and two, we're seeing lots and lots of people now wanting to leave. And that migration is going to affect Europe in a major way, and I think there will be a point when it's just, even now, it's not possible to stop them. So poor Italy now has to receive all of these people. Some people then commit, some other countries commit to helping taking over some, but it's, that's Italy. I don't know if we'll see the same in Spain also. So that is going to change the face of Europe, and I think that our children and grandchildren are going to see a different Europe than we have seen. Yes, the US, and of course the US is the most indebted country in the world. The temporary revival and faith in the US economy is totally misplaced in my view. You know that there are 50 million people now going to soup kitchens, and you call them food stamps, but and there are about 100 million people on benefits of one kind or another. The masses have not, the median income in the US has not gone up since the 1980s. The US has not made a budget surplus since the 1960s, early 1960s. Even the artificial surplus in the Clinton years was not a real surplus. That still went up. The US hasn't had a trade surplus either since, I think, the 1970s. This is a country living above its means that is just surviving because they can print unlimited amounts of money. I mean, this is the biggest Ponzi scheme in the world, and at some point, in my view, that will stop. I don't think we're far away from seeing, I think actually now the downturn of the dollar has started. There are too many dollars in the world, and we know that there's not a single country that can repay its debts. Negative yields, negative interest rates. In spite of that, these countries are not improving. They have massive debts, they have zero interest rates, printing a lot of money, and they're still not improving the economy. Actually, real GDP in the US, for example, if you measure it with real inflation, not with the manipulated inflation that the government uses, real GDP has been declining in the US. And that the wages are declining. And then now, you see, since QE3 stopped last year, now all big figures that are coming out are a lot worse than expectations. And in my view, that's going to continue. I've always been a believer that there will money printing will not stop in the US either, and we will see sometime probably later this year, QE4, because the economy cannot survive without it. So that was just, I know we can debate all of this and you can run arguments against it, but I'm just painting my picture of the world, how I see it, very quickly. It's still probably not quick enough. and do tell me if it's too long this and too long-winded, because I'm happy to make a short version also. So there you have, as I said, world countries, The emerging countries are in the same situation. They're suffering now because commodity prices are down, their borrowings have gone up dramatically. And remember that since 2008, when the world almost went under, or the world financial system almost went under, and just by injecting $25 trillion into the economy by loans, by money printing and by guarantees, the world survived. I just told somebody the story here about my son-in-law, one of them. I have 3 Johnnies as sons-in-law. They're all Jonathans and Johnnies. They all want to be Johnny number 1. And one of them is managing director of Morgan Stanley. That year, 2008, when the world was almost going under, Morgan Stanley was bankrupt and gone. They were saved by the Fed and by a Japanese bank. And my son-in-law bonus was the same as the previous year. And that tells you what the system is like today. Of course, lovely for our family. You probably see this on the video once. Lovely for our family, but not good for the world. So, the financial system now has only survived because of the massive injection of money after 2008. Borrowings worldwide have gone up by $50 trillion since 2008. $50 trillion. And that's by 40%. But we all know that you cannot create wealth by printing useless pieces of paper or worthless pieces of paper. If that was possible, we'll all sit at home doing this, printing. It's not possible. So the only interest rates are at 0. Done the money printing. But they can tax the people more, but there's no use taxing people who are already, when I'm talking about the masses now, not the rich, who are already suffering. But as I see the world, they will still print money in the next 3 years. But before we come to that, if you just look at now the financial system, because I've not talked about countries, I talked about the financial system. Banks around the world are bankrupt. And that's why because you know the leverage. I mean, the big banks, Deutsche Bank has a 50 times leverage as an example. Some banks have reduced their leverage a bit, now American banks have, but at the same time, American bank, for example, just JP Morgan has about 100 trillion in derivatives. 100 trillion, if you understand what that means. Nobody does. This is of the total of about 1 quadrillion derivatives in the world. Most of that is worthless and will become even more worthless if interest rates go up, which I'm talking about later. So, you're looking at a financial system here that temporarily survived because of this massive injection of money. That means that also what they had to do for banks to survive is they had to allow banks to value their toxic assets at maturity value rather than market value. If the big banks in the world value their assets at market value today, no major bank would be standing. So everybody's cheating and the government is helping them to cheat and central banks, etc. So short term, the bubble is growing. But this is why we're talking about get out of the system. You have an extremely unstable financial system. You can tell me, like my wife always tells me, well, it can go on for another 10 years. Of course. But one thing you know is, if you want to insure against this, and we talk about gold later, you cannot buy fire insurance after the fire. You have to have it beforehand. So the risk is enormous. You have to protect against it. And you have to do it now. So we look now at country risk, financial risk, and we talked about briefly the geopolitical system and migration, but you have much bigger problems with the geopolitical system, of course. So the risks are, as I said, greater than ever. And this is where we now come back to protecting yourself and preserving wealth. fact, we decided for our clients, I said I'm not a gold bug because I'm not going to hold gold forever, but I will hold it for as long as the world is totally mismanaged and uncertain. And so we decided for our clients and ourselves that in 2002, although I had seen this risk coming already in the 90s, but in 2002 we decided that the best way to protect wealth was to hold physical gold outside the banking system with direct ownership without counterparty risk, and preferably also in some outside your own country of residence and in a safe jurisdiction. We had an asset management company, so this is what we told our clients in 2002 to put, depending on the client, up to 50% of their assets into gold. Everybody who didn't put 50%, of course. The ones who did at $300, they were happy. And everyone has to decide exactly what they think is the right amount. But to have gold as part of your portfolio at the bottom of your wealth pyramid for the ones who can afford it, as we said before, everybody can't. Everybody hasn't got the money to put into gold. But if you can, this is a lot better than having money in the bank, because money in the bank, I doubt that the financial system will survive at the end of this. If you ask me when, I don't know when it's going to happen, but I'm talking about risk. I'm not talking about timing, and maybe Ray or Michael will have more views about timing, but here we talk about protecting risk. And I think most of us here in this room, I was going to say, in this space, agree that this is a very important part of wealth preservation. Now, somebody might ask me about silver, we can talk about that later. Silver will probably got more than gold, but silver, in my view, is not real money. It might go up faster, but it's too volatile. In Europe, we have the problem of VAT on silver also. So we prefer gold. It's a more stable, and it's always, not always, because we've had silver as part of the money system also, but throughout, for the last 5,000 years or so, gold has been money. And will continue to be the only money that survives in this. We have created a system whereby you buy the gold in the name of the investor you own it directly in your name. We are the facilitator, not the counterpart. We eliminate ourselves as counterpart, and we store it in some of the safest vaults in the world, in Zurich, Singapore, Hong Kong. And we have a unique vault in the Swiss Alps. It's not the Matterhorn. I actually have somebody asked what's the Matterhorn, because we show in some of our presentations here, we show a very nice picture of the Matterhorn. Here you can see the Matterhorn. We've clad it in gold with all our gold. It's not where we hold our gold. This is for very big investors, for big money. But for normal people, we have the other vaults. And this, to me, is what everyone needs to do. You have to have gold in countries where you don't live, where you must have access to. So it's very simple, and I think most of us believe that here. If we look at the gold market, so we went down from 850, and remember that when we were 850 in 1980, in 1971 we were 35. So people say, oh look, it collapsed, it's no good. But people who were there early, I mean, they got only $35, and they're still okay, although nobody liked to see 850 up to 250 as we saw in 99, and the last side on the bottom was obviously when Gordon Brown, the Chancellor of the Exchequer in the UK, and the Swiss Central Bank sold most of their gold at the bottom of the market. Then you know that you are at the bottom, because these guys haven't got a clue. And now we've seen gold going up to 1920 and then down to, it moved very quickly, that 2011 up to 1920, and now we're down to around the 1200 level. there are two markets in gold. There is the physical market and there is the paper market. The physical market produces about 2,500 tons a year, the miners. All of that demand is, all of that supply is absorbed every year. There's another 1,000 tons roughly of scrap gold, jewelry, etc. being melted down and also produced. So in total you see 3,500 tons. Only China today buys 1,200 tons. India buys 900 tons. So they take up almost 1 year of mine production, gold mine production every year. And then, of course, there's demand from other countries also, not in the West, because the West have been continuous sellers, and the East are the wise ones. They understand, they understand what's happening. But the refiners in Switzerland refine most of the gold in the world, and they were working around the clock. So the physical gold that's being produced is all absorbed by the market without any problem. The dilemma is that you have a paper market, a manipulated market, which is much bigger than 100 times the physical market. And this is where governments, central banks, the BIS, the Bank of International Settlement, which is in Basel, which is the central banker's bank, and also then hedge funds and Goldman Sachs, they all manipulate the gold, because if you can sell paper which are hundreds of times more than the physical, of course you can affect the price. And that's happening, and until today no one has actually tried to attack that market because they have been afraid to do it. But what will happen is when the paper holders of gold realize that there is no gold available against their paper, a piece of paper saying that they should get delivery of gold. And when they start to ask for delivery, this is when the market will just shoot straight up. And that will happen at some point in the next 3 years. Another factor is that Western central banks have been lending or leasing to the market or selling to the market without covertly. They're not telling anyone about it. If you take the US, for example, the US has not audited its gold since Eisenhower's days in the 1950s. So no one knows what any central bank is holding. The US supposedly should have 8,000 tons. In my view, they haven't probably got even half of that. But you can see the flow going from east to west. And you can see, for example, gold bars going out of London into Switzerland to the big bars, 400-ounce bars, or 12-kilo bars, being broken down by the Swiss refiners and then re-exported to China. You can see that or in the statistics, because they want 1-kilo bars. So you know that it's coming out of the system to the west, but nobody, but from the west to the east, but nobody actually has been able to audit that. But at some point, the world will also discover that these central banks, I mean, they're supposedly, the Western central banks supposedly should have 23,000 tons, and I doubt they have anywhere near that. Well, I'm trying to paint a picture here that we have a gold market which has been affected by this artificial manipulation. Just like with the Swiss franc when they had the peg at 120 against the euro, and it was depegged on the 50th of January this year. You know, any artificial intervention or peg cannot hold in the long run. I do believe that there's manipulation. In the end, I'm a great believer that market forces will win. And therefore gold will win. The true price of gold, there is no true price. It's a question of supply and demand. I said already in 2002 that gold is likely to go to $10,000 in today's money. I still believe that it's probably a modest level because I don't think we'll have today's money either. But when you remember, you're not buying gold. If you're a speculator or a short-term investor, you're the wrong person to buy gold. Because you're not buying gold for that reason. You're buying gold for wealth preservation purposes. and you're buying gold to hold it, and to hold not for life, to hold it in periods of the kind of uncertainty that we have today. We told our investors to buy gold when it was unloved and undervalued at $300. At $1,200 today, adjusted for inflation, gold is at more or less the same level as it was in 2002 at $300. So it is still unloved and undervalued. And you know that there's less than 1% of world financial assets in gold today. And at some point you will see pension funds, when inflation starts going up, and interest start going up, which they will. And you see that, first of all, gold gets onto the front page, and people start thinking about gold again. And institutions, pension funds, insurance companies, their trustees will demand that they hedge some of their inflationary risk by holding gold. And you can see what I mean, all the physical gold is now being sold today. And as I said before, I don't think the paper market will solve their problems. And there just will not be enough gold in the world. So they can still buy gold, but it's not a question of buying a few tons of gold if you're an insurance company, for example. It's a question of spending X million, and you will get a lot less for your 800 million or whatever you're going to spend, or 500 million. You get a lot less when everybody wants to buy gold because the price is going to go up dramatically. So I can see a major investment from traditional investors coming into gold in the next few years as the economic situation changes. What you've seen since the early 2000s is what I call a stealth market in gold. Gold's been going up from 250, went up to 1900, now 1200. We're talking in dollar terms now. Obviously everyone should look at gold in their own currency. That's important too, but it's easier to have as a currency of reference to have the dollar, but you certainly must buy gold in your own local currency. So we've seen gold in dollar terms going up 5 times, let's say, at today's level. And basically there's no one participating in this market. We're looking at less than 1% of world financial assets. So it's a minuscule market, and once bigger investor group starts to move into this market, it will have a major effect on the price. And I want to stress again, you're not buying gold to make money. All our investors who bought gold in 2002, they haven't sold, because we're lucky to have the investors or the clients that hold gold for the right reason, which is wealth preservation. There will be a time, I'm sure, if I'm still alive, and I hope that before 2045, when we will recommend to investors other type of investments that are, when gold is correctly valued, number one, or maybe even overloved and overvalued, which will happen, and to add to that, and when we have a sound financial system, which we don't today, so we wouldn't recommend anyone, even when it comes to 10,000, don't sell gold at 10,000 if you haven't got a good place to put that money. It's no use putting it in the bank if the banking system is still having mess. But there will be a time when there will be, even obviously do barter also, gold is worth, let's say, 10,000 or 50,000. And other markets have collapsed, property market, or you can buy a factory or whatever for that money that is give you a good deal. Yes, there might be times when you do barter with your gold. But that's not today, and as I said, I'm not in love with gold permanently. I like gold, and times like these, that is the best way to preserve your wealth. But there will be times when you can actually put better use to your gold, because let's face it, as I think Warren Buffett said, you spend all this time, work and money to dig it out of the ground, and then you put it back into the ground in the vaults again. So it's not productive, which is true. It's just real money, and it's the only thing to hold when times are uncertain, or something that you should hold enough of. But at some point, he said, there will be better use of your money. You can actually get the economy going and buy productive assets. And that time will come when, I have no idea at this point, and it doesn't matter, because let's get through the first phase. If we now go to what's going to happen next in the short term here, or in the medium term, this is short term, period to look at. But as I see it, money printing will start again. Deficits will continue. Banking system is under pressure, will continue under pressure. Governments will be under pressure. Deficits will increase. And they, as I said before, the only thing they know now that with interest rates at zero or even negative, they will just print more money. And printing money for government deficits, printing money, the effect of that is the currency fall. And I think we have a good chance of getting hyperinflation in many countries in the world. Remember that hyperinflation has nothing to do with demand or excess demand. Hyperinflation in every case in the world and every economy in the world takes place with currency debasement. It's because of the collapsing currency. So you take the latest major examples that we all know about, what the Weimar Republic, for example, Germany, and Zimbabwe. Okay, so they were countries, of course, the Weimar Republic was just one country, and the rest of the world could save it. But I think what's going to happen now is going to happen to so many countries that there will be nobody to save it, and because there will be only solutions printing more money, but that money will be worthless too. The US certainly will have hyperinflation, Japan will have it, and I wouldn't be surprised to see it in Europe either, depending on what countries will stay within the euro. So. And gold, of course, if we have hyperinflation, just to take gold in the Weimar Republic went from 100 marks to 100 trillion marks. That obviously doesn't mean that you made that return at all, because all you're looking at is purchasing power. Throughout history, 1 ounce of gold has bought a man's suit, whether it's in Roman times or today, more or less. And the only reason why you're holding gold is to preserve purchasing power with part of your wealth. So it doesn't matter what gold goes to, because in hyperinflation you get just ridiculous sums for everything. So that, I think, is a very high likelihood in many countries that we will get hyperinflation. Now, what is the alternative? What if I'm wrong? Well, if I'm wrong, the other side of hyperinflation is deflation. We're seeing deflation now. Every single central banker in the world and every government is aware of that deflation is the end of the world economy. Because no debt will ever be repaid in a deflationary scenario. And eventually then you will get a deflationary implosion of the financial system and all asset values. Therefore, governments will do everything they can to stop it, and that's why, in my view, they will print money. The amount of debt of 250 trillion worldwide, plus the 1 quadrillion derivatives, there is no solution for that. Do not believe that you can solve that problem, because every country, as I said, the US has had a deficit since the 1960s. How do you think they can repay that ever? If you look at a graph of their tax revenue, it's basically flat. No, I'll tell you, from 1980, US tax revenue has gone from 1 billion to 2.5, from 1 trillion to 2.5 trillion US tax revenue. And US debt has gone from 1 trillion to 18 trillion. So you see that tax revenue goes like that, and if you take debt down here, this is the graph. How do you think there's a solution to that? There isn't. So this is why it can never be repaid with normal money. And by printing money, of course, not really. You're just increasing the debt. You're not solving anything. Therefore, they will, in my view, not accept a deflationary implosion. They will print money. But that is only temporary. So as I see the world, we will at some point in the next few years, we'll start earlier or later, but I have not got sufficient timing tool to tell you when, we will have hyperinflation. But all that money printing worldwide is not going to solve anything, of course. So I think we'll first have hyperinflation for a number of years, and then we will still get the deflationary collapse, because the world can only recover by all of that money money that doesn't exist, Ponzi money, all of that money being sucked out of the system, and all asset values coming down to normal levels again. Of course, that is a bit like having a forest fire. You know, when the forest gets too thick, you know, it just kills everything. And it's better that it burns down to the ground and we get new shoots. Now, if that happens, of course, there will be a big change in the world. And we will get social unrest, we will get problems. But it is a big risk that it will happen. I hope I'm wrong. I don't want to say that I'm not forecasting this, but what I'm saying to you is that the risk of this is very high. Now you can say if it gets that bad, you know, is gold going to help me? Well, if you don't have gold, it's not going to help you at all, that's for certain. Hopefully it will help us, but gold is only, as we've discussed here, and I think you're all aware of that, gold is just one part of the system of protection. The most important part is inside family, friends, groups, having that strength. That's how you will survive, and hopefully you will be able to and allowed to use the gold, if not for anything else, at least for bartering. I hope I'm wrong, but from my point of view, you should all have fire insurance, because it's better to have it, as I said before, the fire than when it starts. And then, in the meantime, we should all enjoy life. What other thing? Yes, what do I see happening? Currency is collapsing, and when the dollar, I think, is next, as I said, the yen will also be weak, the euro will be weak, so they're all coming down. Of course, you will then say, they all can't come down at the same time, and somebody asked me before, you know, which currency should I hold? Now, should I hold the pound, the euro, etc. To me, it doesn't matter which one you hold, because they're all coming down. Now, if you're a very good short-term speculator, jump into one and out of the other one, of course. Most people are not. So just hold the currency or your home currency or one. But the best currency to hold is gold. Now you need some liquidity, but if you're investing in gold in a good system, you can actually cash in some gold every month. Let's say that we get this scenario, and you just sell 100 grams or whatever you need for the next 3 months or whatever of gold. I think that's a good way of doing it too, because whatever currency you choose, you are at some point going to be wrong anyway, because they're all going to go down. Now, what about stock markets? Yeah.
As a asset manager yourself or your company, personally, how much you have in gold and the currency? Are you having 100% as a gold investment?
Well, what's happened to us is that, you know, we have clients now in over 40 countries. So we become a specialist in a niche area worldwide. So the precious metals have become by far the biggest part of our activity. So the rest is not really relevant. So we are now a specialist in physical precious metals.
That's fine. As a person,
as a person.
Yeah. My question to you is, as an individual, how much is it? If you can share with us.
Well, you know, I'm Rockefeller. You know, people say don't put all your eggs in one basket. Yes. Rockefeller said, you know, put all your eggs in one basket, look after the basket. And I'm a believer in that, so I believe in more rather than less. I'm not worried about holding gold. But if you then ask, what about if I need to live on it? Yes, if you bought gold in 1900 and you're today at 1200 and you need to sell gold to live on a monthly basis, then of course that is not a good idea. Then you have to have some, if you're lucky to have money in or a job, something that produces something in the short term. I'm not saying that everybody should hold 100% in gold. What I'm saying is you should all hold enough gold that you can fall back on if something happens. But it's always, in the meantime, we all have to live. We have to produce, and today, most people are employed, most people can still generate money, so of course you must continue to do that. But the, let me just think what else. The gold is an important part of your life, but it mustn't be everything. So now we talk about the stock market. The stock market, in my view, are this year reaching a top of major proportions. This is based on technical analysis. Fundamentally, they're of course overvalued, and it's a ridiculous bubble because all due to the money printing, and it doesn't reflect what's happening in the real economy. But I think we are reaching a major top in stock markets, or the Dow, but all stock markets. So we're talking about when this peaks, we talk about a very long-term protracted downturn in stock markets. And this will reflect the world economy. Bond markets is the biggest bubble in the world. I cannot for the life of me understand how people can pile trillions of dollars or euros into markets which pay no return and issued by governments that will never ever repay these debts in today's money. It's just incomprehensible.